Our applied digital trade returned 160% profit in just one day. And the same wealthy investor we've been tracking, the one that led us to this winning trade, is now placing another unusual trade. And so in this video, we'll break down how this same wealthy investor is continuing to trade applied digital and show you how we updated our options trade into a no-loss strategy using new data from unusual option activity to manage risk and protect gains. Now, if you've been following our channel, you'll remember that we went long bullish on this day, June 2nd, after detecting an unusual trade by a wealthy investor while the stock was trading at around $10 per share. This was the video analysis we shared on our channel just one day ago, analyzing data to determine whether applied digital stock would move higher after announcing its AI deal with CoreWeave. And we concluded that the data looked very bullish, clearly flashing a buy signal. And as it turns out, our analysis was correct because applied digital stock just broke out to a new 52-week high. And so if you want to learn more about how we did this, we'll put a link to this video up here. Don't forget to subscribe and hit the notification bell so you don't miss out on these very profitable opportunities. Now, how much profit did we actually make from this trade? Understanding the size of that profit is important because it's what allowed us to set up our next strategy with zero risk. And so if we had simply traded the stock after our analysis, we'd be looking at about a 33% gain. But since we traded options, we had the leverage to amplify those returns, capturing even bigger gains. And so let's take a look at our original trade, the same options that this wealthy investor is now trading again. It was for these July 18 options at the 12 strike calls, priced at $115 per contract when we entered the trade. Keep in mind, this shows option prices, so we either move the decimal 2 places to the right or multiply by 100 since each option contract represents 100 shares of stock. We can see here on the risk profile graph, the profit or loss shows up here. And by the way, this graph already factors in the cost of our trade. That's why you can see here in the blue color, we would have been down at a loss or minus $115 per contract if the stock had moved lower. But instead, since it moved up higher to this level here where it's currently trading, we have a profit of $185 per contract. And so to calculate the profit percentage, we take $185 divided by the initial cost of $115 and then multiply by 100 to express it as a percentage, and that gives us a return of approximately 160% profit. In other words, we made more than our original investment on this trade in just one day. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. Because understanding where smart money flows gives us deep insights into potential stock moves in the market. The rich often have better access to exclusive research and information, sometimes even leaked insider information that help them make smarter financial decisions. It's no secret that the rich get richer when they trade based on deeper insights. And so, if you want to get access to more of these insights from the rich, then just head over to our website. We'll put a link up here. Keep in mind that our members also get earlier access to trades like this before anyone else, before we share it with the public. So if you're ready to stop trailing the crowd and want more time to act on these opportunities, visit our website where you can see in real time when and which stocks wealthy investors are trading on Wall Street so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all unusual trades will be winners, but as long as we use strategies with a better risk to reward setup to maximize profits and minimize losses, then we can stay consistently profitable over the long run. And so, as an example, let's go over how we updated this trade into a risk-free option strategy with no possible loss based on new data tracking this same wealthy investor. As we can see here on the options time and sales tape, when we filter for the options that expire on July 18 and scroll down a little, we can see that on June 4th at around 11:51, we had these three unusual options being traded. And take a look. Notice these are the 12 strike calls, the same options trade we entered. And we can see that these trades were executed multiple times together around the same time, showing a clear pattern of activity. After digging into the data and analyzing other variables and data sets, we concluded that the same wealthy investor behind the initial trade closed these 12 strike calls to lock in profits and then rolled those gains into a new options trade at higher strike prices, the 15 strike calls and the 20 strike calls. And that's exactly what we did as well. Adjusted our position to manage risk while keeping upside potential. So, how did we mirror the same strategy used by this wealthy investor? Well, let's walk through how we set up our new trade. As we can see here on the option chain, for the July 18 options, we closed our previous position at the 12 strike calls and rolled into these new positions at the 15 strike calls and the 20 strike calls. You can see our new positions here. POS stands for our position. The green color indicates a buy position, and the red color indicates a sell position. And so, by closing these 12 strike calls by selling them, we locked in our profits. We then used those gains to buy these 15 strike calls, and we sold these 20 strike calls. And because this new trade cost less than what we earned from selling the previous position, we entered this new trade for a net credit, not a debit. In other words, this new setup is risk-free, funded entirely by profits from our earlier trade. And so, when we analyze our trade now, you can see here on the risk profile graph, since this previous buy position is for the same July 18 options at the 12 strike calls as the sell position, they offset each other, effectively canceling out these options because the position was closed. So now we are just left with the vertical call spread at the 15 and 20 strike calls expiring July 18. And so you can see that if applied digital stock goes down, our trade would not suffer any negative losses because we've already locked in more profits than the cost of this new trade. This is how we updated our option strategy to manage risk by minimizing losses. In this case, we eliminated any possible losses while still giving us the chance to gain more profits if the stock continues to rise. But keep in mind, this no-loss strategy was only possible because we followed that wealthy investor early on this day before the stock hit a new high. And so, if you missed our previous analysis on Applied Digital, we'll link that video here so you can see exactly how we predicted this breakout that delivered a 160% profit. And if you want to learn more about how to increase your profits, visit our website. We'll link that as well. As always, please like, subscribe, and until next time, let's keep tracking the trades of the rich so everyday investors can profit too. Take care and have a wonderful day.